that's what the Fed is stepping into now. They are forced to cut into an accelerating consumer price inflation environment, and this is making them nervous because they know it can't work. But there's nothing else that they can do, because if they don't, the banks are going to collapse, and if they do, the dollar is going to collapse, and they're headed into that choice now. That's where they're going, and they know it, and they're getting nervous.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for September 22nd through September 29th, 2025, while supplies last. First this week, the famous 1-ounce Gold Krugerrand are just $60 over spot. Next, MS62 $10 Gold Liberty are only $90 over melt per coin. Finally, 100-ounce silver Johnson Matthey bars are just $2.20 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Rafi Farber from the Endgame Investor. Rafi, thank you so much for joining us today.
Hey, Elijah, good to be back, and things are getting kind of wacky.
Yeah, things are getting quite wacky. Today is September 25th, Thursday, so this will be posted tomorrow. But as we're speaking, silver is above $45 and gold again is racing higher. I guess just your general overview of what's happening right now.
I don't know exactly, but what I would guess is a big part of it is I just right like maybe a minute or two before we started the interview, I was looking at Yahoo Finance, and a lot of the head articles are like, the Fed is worried about this Fed member is talking about that, changing the benchmark interest rate or how they control interest rates or what interest rate to target. It's like the Fed FOMC board or whoever votes on it, they're usually monolithic and they all say the exact same thing to the media. It seems that they're starting to get a little bit frayed, and there's starting to be a little bit of independent thought, like, independent thought alarm. Everybody start worrying about the dollar. Like, when the dollar is run by a bunch of central bankers that have different ideas and they're all getting nervous, then that's when the dollar is shaky. It's it's a coincident indicator. It's not leading or lagging. It's like when the central bankers get nervous, the dollar is getting a little bit shaky. And if you want to do an interesting research project, I've done this before. Look into the Federal Reserve website, and they have old transcripts from the 1970s and early 1980. They have transcripts word for word, not the minutes. They have the minutes too, but every word that was said. Dialogue between Volcker and his little minions, what they were saying. They were like nauseous in late 1979, early 1980. They had no idea what to do, and they were all freaking out and asking Volcker for leadership and just to calm them down. So that's what the Fed is stepping into now. They are forced to cut into an accelerating consumer price inflation environment, and this is making them nervous because they know it can't work. But there's nothing else that they can do. Because if they don't, the banks are going to collapse. And if they do, the dollar is going to collapse. And they're headed into that choice now. That's where they're going. And they know it, and they're getting nervous.
It seems like for a while, we've thought that the Fed is trapped, and it seems like things are coming to a head at the moment. They've done, it seems like, a pretty good job keeping inflation relatively low, at least if you look at the official numbers. But it sounds like, right now, as you mentioned, they're having to reduce rates because of the jobs market and all of that as the official reason. But yeah, inflation is not under control at the moment.
Yeah, it's not. It's above 3%. So they used to talk about something called symmetrical inflation, where you try to get it above because it's been below too long. You haven't heard that word come out in the last few years. They haven't heard anything about symmetrical inflation at all. This takes me to they're running out of academic excuses because they know that people are suffering. The rank and file average Joe type of American is not going to have that much savings, and he's going to be really hurt by these price increases, and they are being hurt. And there's really nothing the Fed can do about it right now. And since they're out of their techno babble macroeconomic, econometric excuses for what's going on, this is where things get visceral and things get a little bit scary for them. And, with Trump on the attack also, they're being attacked from that direction. I'm not saying the attacks on them are good or bad. It's just, I wouldn't want to be a central banker right now. I kind of feel bad for them, but I don't. It's like when your enemy finally gets his comeuppance and you've been thinking about it for a long time. When you see it happening, it's like, it's not so nice, but there's nothing you can do. But you're on the other side, and that's good. And you made the right choices, and now you just have to live with watching other people fall, including central bankers. And all right, I enjoy it with maybe 5% of my, Schadenfreude type of personality, but mostly it's just sad.
And how does the repo market play into this? I know you recently made a post on that saying that things could really be coming to a head at the end of this month.
I'm not even sure the Fed understands this. It's a matter of basic arithmetic. It's not that complicated. I see these articles over and over, they're saying what's the amount of reserves that is ample or appropriate for the banking system. Well, it used to be zero because the repo market wasn't really a big thing. But then once 2008 hit and they had to buy all this dead debt, and then all that dead debt turns into reserves, which they have to keep cycling through to keep the balance sheet big. So you have all this ghost debt that can no longer be paid back, but it lubricates the pipes inside the main aorta of the banking system. So the basic arithmetic goes like this: it's that there's $2.9 trillion being traded every night between banks for reserves in exchange for treasuries. And then you come out and one of the Fed members said, well, I think the appropriate number for reserves is 2.7 trillion. I don't think we're going to hit any problems until 2.7 trillion. But I look at that, I'm like, seriously, you're going to say that in public, 2.7? But then what about the 2.9 trillion that are being traded every night? How does that work? How do you trade $2.9 trillion every night with 2.7 trillion in reserves? This doesn't, the math doesn't add up. There's $200 billion missing. So what do you say to that? Either they have no idea what they're talking about, or you can trade more than the amount of reserves in the system every night through some kind of mechanism that I've never heard of and I don't understand. Maybe. I don't think that's going to happen. But the point is that reserves are now 3 trillion, almost 3 trillion flat, because the Treasury has been raising a bunch of dollars and they get that from bank reserves. And reverse repos are now basically zero. So nothing can come from that box of money back into the bank system. It's pretty much empty. So, when we hit September 30th, which is only 5 days from now, when repo generally spikes for whatever regulatory reason that it does, it doesn't even matter, but it does every quarter end. So we're probably going to have repos above $3 trillion in volume with reserves below that. So what happens is that you have to bid higher for repo cash, higher than they want to control interest rates for. So that's what happened in the repocalypse. That's what I think is going to happen now. If you have more repo trading volume than you have reserves, I mean, there could be a mechanism I just don't know about, some kind of magic money box that exists somewhere that I never heard of, but that's what I think is going to happen. I think interest rates are going to go up next week.
And that's something that a lot of our guests have been concerned about, is if the Federal Reserve lowers rates, but the long end of the curve increases. I mean, that's what we're seeing with Treasury yields increasing at the moment. What does that signal about what's happening in the financial system?
Well, you're talking about the yield curve or the yield spread. So if you look at the yield spread, or you can look at either the 10-year minus 3-month or 10-year minus the 2-year. When money is tight, then the curve generally goes negative, or in short-term rates are higher than long-term rates, but that slows down the money creation process. But typically, for whatever reason, when you see long-term rates heading back up, and the spread between long-term and short-term getting higher and higher and the wider apart, after it being negative for so long, that is generally the signal for a recession. You'll see, if you look at the chart, you'll see it in the early 90s, you'll see it in 2000, see it 2008. Same thing over and over again. Once the curve goes negative, that doesn't trigger the Keynesian recession, whatever they want to call it. It's when that yield spread goes higher that the recession actually hits in. And when you have a Keynesian style recession, the move is to print even more money. That's the strategy. That's what they always do. That's what Keynes says to do. When you hit a recession, you have to plug in the difference with more government debt. So, what happens this time when they do that? When consumer prices are already rising by 3.3, 3.4%, whatever it is. So then you print even more money, and then they start rising by 6, 7, 8, and they don't stop. And we could very easily be in a crack-up boom situation very soon, very quickly. I mean, and we hear these sort of end-of-world type of headlines. One came out today, like Hegseth is calling all generals from everywhere in the world and telling them to meet in Virginia or something. I mean, these clusters of nerve-wracking headlines come in tandem with big economic events, usually, either because that's the nature of how the world works or because somebody's planning it. I tend to go towards that's the nature of how the world is. When money is a problem, people do crazy things. Powerful governments do crazy things, and they endanger the world. I think the world's going to be fine, but we have quite a bit of acrobatics to do from here. And let's do it and see how many flips we can do before we land on our feet.
And I think that's what we're all hoping, is that people do land on their feet safely and that we return to a sound monetary system. I did want to ask you, kind of along the way, there's a lot of hurdles we have to kind of pass over, and a lot of crises. Obviously, there's the monetary crisis, but there's also issue in real estate right now, especially across the world. In China, you've talked about how the Chinese real estate market is not just doing bad, it's doing very bad at the moment. Can you expand on your perspective on this and what you've done in your research?
Yeah, this actually is in my research. I was pointed to a video by Phil Lowe of the Bitter Draft of a Chinese man explaining why China is actually going to be one of the poorest, biggest country in the world once this monetary system resets, once the dollar collapses. People want to believe, or the orthodox opinion is like, well, China's supplying all the goods, they're going to be fine. But it's not going to be that way, because the wealth that they've been stacking, which is basically US dollars in their basement, the US dollar itself, if that dies, then all of the wealth that they stacked is no longer worth anything. So then what do they have? And his point in this video that he made was that imagine if you have all this capital, but it's locked behind a door and you can't get in it. He used the example of a grain silo, but nobody can get in the silo to use the grain. And if you try to get into it, the government will kill you. So that's what it's like in China. Like they have capital, but they're not allowed to do anything with it because they have this crazy mercantilist idea that all you have to have is the capital that just sits there, and then that's your wealth. And then the government doesn't let you use it at all, and then you're supposed to just be wealthy. So they have this like infantile idea of what wealth is. You could say all Keynesians do, but then the vehicle of that wealth, right? It's just like logging in and looking at your stock portfolio and you see a certain dollar amount, but then how much of that is inflated valuations? You don't even know because the yardstick is all messed up. So in China, the government has been like basically forcing people into investing their savings into housing for decades. So what happens if everybody's doing that because they have to, and then all of a sudden housing prices fall? So everybody was never, it's not that everyone suddenly becomes poor, as the fact is that everyone's revealed to never have been rich in the first place. So if you look at you could just go to tradingeconomics.com. That's how I found all this stuff. Trading Economics, you get an account with them. You look at all the entire housing section of the China tab, and you graph after graph after graph. Everything's below zero. The prices are going down. The building permits are going down. Everything is in negative territory. Everything. So with China, sometimes it takes some time for these negative price swings to infect the banking system. The banking system, I'm telling you for sure, is infected. It's just going to take time for someone to keel over and die, and then for the next one, after the first one goes, the next few are just going to be right in line, and then you'll see there's a crisis in China, and that should bleed over into the West, and the West has its own problems. It looks like everything's timed for some kind of demolition or detonation all at the same within a very short amount of time now. The dominoes are going to start falling if they aren't already.
And obviously the financial system is very interconnected. So if the Chinese banking system started having issues, do you think it would flow into the US?
Well, I mean, obviously it would, because you're talking about the number one and number two trading partners of goods and services in the world. So if the accounting of one of those countries goes to hell, then obviously it affects their trading partner across the ocean because they're doing business. There's only one banking system in the world because the dollar is the reserve currency. There's two sides. That's a double-edged sword. In a reserve currency system, you get to export your inflation, but then when that stops, then all that export inflation has to go back to the source. It doesn't disappear; it just moves. Right? All the inflation that has been created since the dollar became the reserve currency is all still there. Debt from the 1950s and 60s. It's all still there. Why? Because it has to be rolled over. It can never be extinguished because we're not on a gold standard. There's no debt can be extinguished. This is what Keith Weiner talks about a lot. That without gold as the money or as the statutory money, I know it is money. I know naturally it is, and it still is. But without gold as the final extinguisher of debt, debt can only be rolled over. You're forcing yourself into a Ponzi scheme. There's nothing else you can do. So all the debt from the 1930s, 40s, 50s, ever since the dollar and gold were no longer convertible, it's all still there. It's in the form of bank reserves just rolled over decade after decade after decade, and it's all going away. And it goes away when it gets devalued against real money, which is gold. And then all those trillions of dollars of debt held by every country, all the trading partners with the dollar at its base, it's all one banking system controlled by different little central banks all over the world, but basically one banking system with the dollar as the reserve currency and gold underneath the dollar. And then when the dollar falls, all the currencies on top of it fall, and the entire banking system of the entire world that has now the dollar as the reserve currency, they all fall, everything.
No, and I think we've talked about this before, but the dollar being the reserve currency, a lot of people argue that, we won't see hyperinflation. We won't see these issues because we're the reserve currency. But you've argued before that no, it's actually precisely because we are the reserve currency, and there's so many dollars outside the U.S. that once people lose confidence and those flow back, it'll actually make the inflation worse and maybe even more sudden. Is that still your view?
Oh, absolutely. That's still my view. So yeah, what exporting inflation does is it delays the inflation. When I say inflationary, I mean rising consumer prices. It delays the effect on rising consumer prices because you're exporting all those dollars outside your country, but they're still there. And when they will be sent back because China doesn't use dollars. They use yuan. That's their currency. So they have no direct use for dollars within their country. So then when the dollar is losing value, the best they can do is send it back to the source. And every country will do that at the same time. So yeah, it will. All of the delayed inflation that the United States never experienced all comes to its door in a sudden flood of reversing the whole reserve currency situation has to be reversed, and it's not going to be gradual. It's going to be very sudden.
No, you've recently been talking about investing in mining stocks and clarifying that really first and foremost for the end game, physical precious metals is the way to go. But there is some room for mining stocks, and they're kind of making the headlines in at least the precious metals space right now because they're performing quite well. If you look at SIL or the GDX, the major ETFs out there have been doing really well lately. Your perspective on how should people be considering mining stocks while still primarily looking towards physical metal?
I would say just forget about the dollar amount. Don't use mining stocks as a way to increase your dollar stacks. The reason I hold mining stocks is because, first of all, I don't want to have only bullion. That makes me nervous because I don't know where to put all of it. I have enough for what I think will get me and my family through the end game. That's all. in a modest way where I'm not going to like be ostentatious or anything. I have no desire for that. It would be dangerous and also insensitive, and it's just not my personality to do that. So, where am I going to put anything that I don't need for the end game, for end game needs? I would put it in a company that I know can pay me dividends in a new monetary system. So when I buy a miner, I'm thinking like I want to buy a central bank, and then maybe bequeath it to my kids when 10, 20 years from now when this is all over. And it will definitely be over 10, 20 years from now. I have no doubt about that whatsoever. I want a piece of capital that produces money, because with this end game, I don't think we're going to go back into fiat. I don't think it's going to be possible. We're going to have to deal in gold and silver for as long as it's going to take to rebuild trust in some kind of credit derivative of gold and silver. But it's not like people are going to immediately go back to paper, because like, look what just happened. It's going to take a long time. And in that time, you're going to want to have companies that can produce gold and silver and pay you dividends in the money that's going to be for the world at that time.
What signs are you seeing that, or can you expand on why you don't think people will be kind of duped again into a new fiat currency system? Because obviously a lot of the times when we see a high inflation and a collapse of the monetary system, we do return to sound money. But for example, after the Germany hyperinflation, that's not what happened. People were duped again into another fiat currency system, which was manipulated and all of that. What is your take? Do you see signs today that people are waking up and will return to sound money?
Yeah. When you say duped, I don't think that people get duped and you convince them, and like some speech by some politician on CNN or whatever convinces them, oh, we're going to try this credit derivative and it's going to work. It's not that people get duped in that way. The dollar built itself on many decades of legitimate commerce in the 19th century and early 20th century. And it was convertible. You could go to any bank and get your gold for your dollars, and there were problems, but they weren't as big as now. So for example, when Germany and when Weimar was, let's say, duped by the Rentenmark, they were and they weren't, because ultimately it went back to dollars, and through some kind of derivative chain, the Rentenmark was saved by the dollar. But when you're talking about the dollar itself falling, there's no other derivative to build a system on, because that is the base credit derivative, again, reserve currency. When that falls, it's not a matter of not being able to dupe. If you look at the pyramid and then you take out the second layer of it, what are you possibly going to build a credit derivative based on? What? It can't be the dollar. It can't be anything else. It would have to be gold. So you'd have to have a currency that has been traded convertible to gold for long enough that people would actually say this is a convertible currency, because people are going to be so sick of paper money and derivative money, derivative credit for after this goes to hell. They're going to be sick of it. And they're not going to want to go back until I would say a full generation, maybe 20 years, that we're going to be trading money. And that's really going to slow things down. It's going to change life as we know it. I think it'll be okay, but it'll be very different from what we know now.
That's so interesting. Yeah. How, government can't just create a fiat currency from ground zero. I mean, that gets back to, I think, Mises's regression theorem that you've talked about before, how you have to originally start with metal or something of value, because otherwise you kind of get into a vicious circle. As if you ask, well, what gives currency value? Well, it's purchasing power. Well, why do people think it has purchasing power? Because it has value. I mean, there's this circle there, unless you go back to, well, one day it was actually connected to gold. So that gives people the basis for the value that now doesn't exist, but it's still, people in a sense have that memory. But what you're saying now is the whole base of the pyramid is going to go away, right? The dollar is the foundation, and if that fails, then all fiat currencies fail, and we have to start back with something of value, because you can't start just with a pure fiat currency from nothing.
Yeah, you can't. It's not possible. All fiat currencies today are based on the dollar. That's when any country hyperinflates, what do they do to restabilize themselves? They repeg to the dollar. That's exactly what Israel did in 1985. It's exactly what every hyperinflating currency does. That's what Argentina is trying to do right now. They just did a $20 billion currency swap. That means that pesos are backed by dollars. That's what it means. That's a currency swap. This is how the dollar prolongs the hyperinflationary process in every country. But there's nothing that can prolong the hyperinflation of the dollar itself, except for the fact that it occupies that space as the reserve currency. That's the only thing that's stopping it. But once that goes, everything happens very fast.
Well, it'll certainly be very interesting to continue to track this with you, Rafi. Things, I keep saying this every time, but things really seem to be heating up here as we see precious metals just increasing day by day. If our viewers are interested in learning more, they can find you on Substack, endgameinvestor.substack.com. Can you tell us a bit about what they'll find there?
Yeah, you'll find a play-by-play. Basically, I'm trying to entertain myself and calm myself down and be positive about what's going on, all wrapped up in a little, package. I'm a back-end observer, so I'm looking at the pipes of the system, where the money flows are going, those huge pipes of trillions of dollars moving every day. So I'm looking less at the little minutia and more at those big pipes, like where are they being reconnected to, what is going on, can they fit? And I think we're close enough to the breaking point that it could be weeks. I think it's not going to be more than a year. I realize I've said that before, but it's the way things are accelerating now. It's crazy. What you're hearing, and you look at the price action. Look, if you want some entertainment and to be calmed down as this is progressing, check it out. Endgame Investor at Substack.
And I think valuable information as well. Like last time I had you on, I think it was last time or maybe the time before, you were focusing on, you were mentioning how gold was in this channel, for about 4 months, and it was time for it to break out. And hey, you called that pretty well there. We're $250 above that previous high. So yeah, it's very valuable information.
Sometimes I make good calls, sometimes I don't. But the point is, if you want the confidence to know that this is the right path, I'm pretty good at that. Like, even if I may make mistakes along the way, like I know for sure that gold is money. I know what money is. I know very well what money is. I know what's going to happen in the end game. And I know that you're going to need money to get through it.
Certainly. Well, Rafi Farber, really appreciate your time today. Thank you so much, and God bless.
Thank you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for September 22nd through September 29th, 2025, while supplies last. First this week, the famous 1-ounce Gold Krugerrand are just $60 over spot. Next, MS62 $10 Gold Liberty are only $90 over melt per coin. Finally, 100-ounce silver Johnson Matthey bars are just $2.20 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.